Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, daily chart, and what we've got here potentially with going on 3 sessions below the green line here, the 20-day simple moving average of the daily mid-band, is a sell rallies market. Those of you that have followed me for any period of time, many of you for months and years know that one of the baseline foundational check boxes that get checked with me every day is this an instrument that is trading above its 20-day simple moving average, above the middle Bollinger Band, or below? If it's above, and in the world we live in, it usually is, that means the market is what we call buy dips. So they bring it in, the dip buyers come, maybe you chop a little bit, you make a higher high, off you go. A sell rallies market is the inverse. It's a market that wants to trade between the green line, the middle band, and the lower band. And we've engaged in what we've called a lower band, a lower Bollinger Band ride, which I'll talk about in a minute. Markets that want to trade between the lower band and the middle band are sell rallies markets. So you hear the term sell rallies out there. That is what we saw yesterday. That's what we might see today if the bears are able to keep up the pressure. Okay? So you can see the yellow line here. That is the lower Bollinger Band. We've engaged it for a couple of days in a row. There's a chance for the bears to go on what's called a lower band ride. That's when price tends to get directional to the downside on a multi-day basis. Rallies tend to get sold, and price tends to reach for the lows of the prior day late in the day, and you make a lower low. That's the anatomy of a Bollinger Band ride. They're born out of tight bands, and we talked a few days ago about how we've really been just kind of chopping between the 9-day and the 20-day, and the bands are starting to get a little bit tight. They're 2.46 right now, which is the bandwidth. That's measured down here at the bottom of the chart. Back here when we last talked about it, it's nothing. 3.84. Now it's 5.2. They never really got all that tight. You can see here, right around Christmas time, they got a little bit tighter. They got very tight on the hourly. So let's talk about the hourly chart. So we started off by talking about, early in the week how 3,900 was resistance. The bulls were having a lot of trouble getting through 3,900. They couldn't get it done. They didn't get it done. We battled with the 9-day and the 20-day in tight bands. See how the Bollinger Bandwidth has kind of gone through the floor there. There was a point where it got under 1.0. Tight bands, wide bands. When the wide bands happen, you get expansion. So compression, expansion. You had one failure here at the weekly pivot, 38.42 and change. Brought it down. They bounced it off our pre-FOMC level, which is basically the price before the last Fed meeting. The last price before they opened their mouth, 37.77.5. And I hope some of you out there see why we track some of these levels and how useful they are for those of us in the subscriber chat room as we run around and book 120-something handles yesterday. Just saying. Now, they lifted it yesterday from the pre-FOMC price, where? Back to weekly pivot. And it failed. I didn't catch it up here. I was long. I was like, they're going to blow it again. So you let it come in, you get a couple of lower highs, and then we caught the rest of the short down. But this is a very technical failure, and a very technical failure that, honestly, the bears can't get it together to do very often. I mean, that's usually where they fall on their face. And you go like, that would have been where, but that would look cool. It's over. Not that time. Not that time. So what do they get? You get a hard move down. 37.20.5, a couple of looks there. And what we've been doing since is kind of hunting and pecking below that pre-FOMC price. And we've got jobs in about 20 minutes. So the bears are in a very precarious position. If they rip it off the jobs report, they're going to have to find their feet up here somewhere and fight it off. But again, here's your daily Mid-band way up here at 38.77. You got 38.42 resistance. You can put in a lower high anywhere in here, and as long as you push it down in that lower Bollinger Band ride on the daily chart that I showed you, the bears can continue to keep this a sell rallies market. So they've given themselves a little room to work with now. So as of right now, we're long. I missed the whole move down last night. I was out doing stuff or whatever, but I came back and we started to solidify in and around the 30, 35 area. I think we put a low in, 31.25. So we got long 35, 36. We took some profits. It was nice enough not to stop us out here. So we've got a runner that I've had everybody move their stops up to 65, 66 heading into jobs. And I'll, look, if I get stopped out at 8:31 rather, I don't really care. And we'll see if we can catch a little bit more of this heading higher. So you can be long in this stuff. You just have to understand, first of all, the rallies will rip farther and faster than you would imagine. Second of all, if it really is a sell rallies market, then things like this are going to happen, and you're not going to catch it all. I have an old 80% rule that I used to do in webinars, 5, 6, 7, 8 years ago. And the 80% rule is this: I don't care about the first 10% of any move, and I don't care about the last 10% of any move. I want the middle 80%. And as close as I can come to that metric, you'll be capturing a heck of a lot more handles than most people do. And I don't care if that's a 6-handle move or a 60-handle move. Focus on the 80%, focus on the meat of the move, and you'll be there. All right. Everybody have a great day, great weekend. Be safe, be healthy, take care. Trade them well. Get your butts in the room. Let's go. I'll see you there Monday morning. Better yet, I'll see you there in an hour. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.